Good morning, everybody. Thanks very much for joining us. My name is Richard Betts. I'm the publisher at Real Asset Media, and we do a number of these events, probably 60 or 70 a year, focused on either different geographies or different sectors and different hot topics in the market. Thanks very much for joining us from the RealX Exhibition Centre. You can also have a look at the stands afterwards. You can connect with one another, and you can ask questions, make comments. All of those are available, and the joy of this being live is that we will try our very best to make sure that we answer all of your questions. Super panel here today. We're going to be focused on France. As France is beginning to come out of lockdown, and then we'll be looking at what the current market situation is and where we think we're going to be heading, both in terms of the short term, but also the longer term, both in terms of the sort of business outlook and also the investment outlook. So really good panel for you here today. We've got Benjamin Cartier-Bresson, who's head of the Paris office for Berlin Hyp. We've got Didier Ungelic, who's president of L'Etoile Properties. We've got Sabine Leuschner, who's partner for Sagasa. We've got Guillaume Turcas, who's managing partner for Faro Capital Partners. David Rendell, who's managing director for La Française. And last but not least, Guillaume Ungelic, who's managing director for France for L'Etoile Properties. So we're going to be able to pick up both on kind of some of the investment outlook in terms of the perception looking beyond France and the comparative with France, and also directly with what's happening in the French market. Let's just start with some quick introductions. So Benjamin, just a quick minute on yourself and the company. Benjamin.
Thank you very much, Richard. Thank you for welcoming me here today. Very glad to participate once again. I'm in charge of the French operations of Berlin Hyp, which is a German mortgage lender focusing on senior debt against commercial properties. And we are a team of 5 people here in Paris. We've been doing the business for 10 years now. And I'm glad to get requests for financing for you and possibly issue the best terms.
Great, thanks very much, Benjamin. Let's go to you, Didier.
Okay. Hello. Thank you, Richard. I'm the CEO of L'Etoile Properties. So I'm actually not following day by day the French market, but I'm rather witnessing what's going on in Europe through our various offices. And I'm happy to share my views on Europe, but also on the French market where Guillaume is active. Very good to share our opinions.
Super. Thanks very much, Didier. David.
Yeah, good morning, everybody. Thanks, Richard. La Française is the asset management business owned by CMNE, Crédit Mutuel Nord d'Europe. So we have a fully French shareholder. La Française today has AUM of just over 50 billion euros. Approximately 50% of that is in real estate. And I'm responsible for the institutional pole, which represents about half of that AUM, acquiring and managing real estate assets for institutional investors all over Europe, including France. I've been personally based in Paris now for a bit over 20 years.
Super, thanks very much. Sabine.
Yeah, thank you, Richard. Happy to be here. Good morning to everybody. I'm a German-French lawyer and a German certified tax advisor. I attended also business school USCP in Paris. And more than 7 years ago, I moved from Germany to France when working at the time for Union Investment. For over 12 years now, I'm working for international asset managers and investors, as I'm specialized in investment funds, especially fund structuring and real estate transactions. And since 2019, I'm partner at Sagasa Silas. We are a German-French boutique law firm specialized in cross-border financial services and banking, including financing as well as M&A and real estate.
Super, thanks very much. Guillaume, just give us a quick introduction of yourself and Faro Capital Partners.
Hi, everyone, and thanks, Richard, for having me. So Flower is a boutique real estate company based in Paris and established 4 years ago. Our main objective is to advise, assist, and provide real estate investors with investment strategies that are designed to enhance value creation.
Super, thanks very much. And Guillaume, maybe just explain a little bit about, I suppose, L'Etoile within France and yourself. And this is the first time, by the way, that we've ever had a father and son combination on one of these. So congratulations, both of you, for that. Guillaume.
Thank you.
Hi, Richard, and thank you for hosting me. Yeah, I'm running the French office of L'Etoile Properties, and I've been working on acquisitions and asset management over the last years as well. I think that I've coordinated something around 1.5 billion of euros of acquisition since 2016. And we have today a team of approximately 15 people in France working on the full spectrum of the life of our assets, from sourcing to disposal, performing acquisition and asset management in between.
Super, that's great. Thanks very much. Let's just pick up a little bit, maybe starting with you, David. Obviously, France beginning to open up now, gradually on a roadmap. I suppose, how are you seeing the current market at the moment?
Yeah, I think we're sort of coming out, obviously, of the deep COVID period. The worst of it, I think, is now fortunately behind us. I think what we've seen is that the one of the most significant impacts in terms of the investment market is the difficulty for international investors to invest in Paris. It's a pretty basic thing, but we know real estate is a tangible asset, and therefore you need to visit the asset before you acquire it, and actually that's really stymied international activity in the Paris market, not just Paris but other markets, because we're focusing on Paris today. I'll speak primarily about Paris. We do a lot of business with Korean investors, as do Etoile Properties, and one of the challenges has been for Korean investors has been very active in the Paris market is that they have not been able to travel, so that has reduced the volume. I think another factor we see is the focus on core. Whilst volumes have been lower, there is a tremendous amount of capital which still wants to get into the Paris market, but that capital has been really focused and channeled into really super core assets, and in fact, perhaps somewhat surprisingly, yields that we might have expected a year ago to be expanding, so increasing, therefore pricing going down. Actually, we've seen, because of the dearth of product in the prime sector, we've actually seen yields compressing. So we're now for prime CBD assets in Paris, we're below 3%, perhaps not 2.5%, but we're somewhere between 2.5 and 3%. And as I said, there is a real shortage of available stock. On the other hand, for assets which are perhaps you put into the core plus or value add segment, that's more challenging. Not least of which, as I'm sure Benjamin will speak to later, the availability of debt. Banks are just not very keen today to lend on kind of secondary or marginal assets.
Okay, well, let's pick up on a little bit on that availability of debt. Benjamin, feel free to pick up, obviously, on anything that David has mentioned there, but also how are you particularly seeing the debt market at the moment?
Yeah, thank you. Well, indeed, it's true that we need to make business. We need to make money. So mortgage banks, at least Berlin Hyp, has a strong appetite for new loans and developing the business, whether in Germany or in France. But of course, we need to ensure that our portfolio of loans remains of a very good quality. And that means we need to finance properties which show good or high visibility in terms of cash flow, which during the last months has not been that easy. And that's where we see that the office is an asset class which is very resilient, because this is where I understand the leases have the less been challenged, and that pushes us to lend against that kind of assets, as opposed to assets which are more difficult to predict in terms of cash flow, like retail, of course, or maybe hotels as well. But important to note is that this is nothing really new. The retail asset class has been challenged for years, and the phenomenon has just been accelerating. And also where we focus at the moment is on logistics facilities, because this is a market which remains very strong, with also very long lease terms, which is fine for us. Our goal is to ensure that over the coming 12 to 2 years, the cash flow will be there, and that means strong covenants and, as long as possible, lease terms.
Okay, good. And Guillaume, obviously in terms of Faro Capital Partners, you're often looking at different types of investors, sometimes the more value-add side. What are you seeing at the moment?
I think, value-add is, I would say, at a critical stage, obviously, because there's a kind of a dual perspective in relation to this one. If you took, I would say, the prime location, it's a strong, fierce battle to, I would say, get the few opportunities that are on the market, and also I would say extra paying, and to at the end of the day potentially getting a reward that is not so exciting that we used to have in the past. On the other hand, if you go to the suburban part of Région Île-de-France, or even in the regions, it's I would say another kind of strategy. Is obviously, I would say the competition is not so fierce, but first there's not so many products that are available. And in addition to that, you have to add a lot of layers of risk. First, obviously, is the financing, where you need to adapt and to, I would say, look for more, I would say, exotic partners versus the usual markets banks. And also, you would face a tenant market, a leasing market that is not so, I would say, bread and butter than the one we could have in the strong location. And at the end of the day, obviously, is the exit. So I would say either you get into action into a very competitive market, or you go, I would say, to a more suburban part of investment region where you can face I would say, many risks. But it's just a way of adapting.
Okay, good. And Didier, I just wanted to come to you. I mean, you've seen a number of different crises come and go in your time. How do you see this one? And I suppose, particularly looking at office, for example, Paris is a huge office market. How do you see things like work from home potentially beginning to impact this part of the market?
Yeah, I mean, as you say, unfortunately, I'm getting old, and I went through many crises, and every time it's the same. We swear, hand on heart, that we will never do it again, or that we will change our mind, and then a year later we're back to normal, and everybody has forgotten. We remember a few things, but the rest will go back as usual. And I think it's going to be more or less the same here. That's my belief. Obviously, there will be some some people working from home from time to time. I think that we got used to this facility, but it will not become a major use. It will be a possibility that is offered to the employees. But we see through various tools that most of the people, they just want to go back to the office and have their social life, see the colleagues, and go to restaurants and blah blah blah. And maybe 1 day a month, 2 days a month, they will stay home because it's practical and they like it. But business can only be done when people get together. That's because it's not only what you see on the screen when we do Teams or Zooms, but it's also body language. And what is important is what goes between the meetings when you cross someone in the corridors or in the lift, or that's life. So I don't see the impact of COVID and like home working to be that important in the future. What I see more importantly is that people became aware that it might not be that good to walk so close to each other and in the offices having desk against desks, and they might wish to have a bit more space for themselves, and they might wish to have more common space where they can exchange, and that might impact the design of our buildings, of office buildings in the future. And that comes as a complement of what I think has become already a major point in any decision to invest is ESG and environmental issues. That has become really the key point, and we see that in most of the investment committees of a lot of investors, the ESG question comes first. It's not even a question of whether the building is well located, well let, whether I don't know, but is it an ESG eligible investment? And that comes together with, in a way, the COVID is one part of it, but it's not by far not a major part of it. I think that's where we have to think for the future. What do we buy? I think we'll have to be much more selective in what we buy, not for now, but for tomorrow. How can we make sure that our investment is eligible for tomorrow? And that's where I don't agree with Benjamin, who says that he only wants to finance fully debt building with no risk, because I think that the future is in taking some risk for the future, that we have to buy very far, we have to buy buildings to be built that we will be able to build for tomorrow. And if we only buy buildings for today, we're not planning the future.
Yeah. If I may, I totally agree with you on this point, Didier. Maybe regarding the current crisis, I would still say that it's very different from the previous ones, due to the fact that at first leverage, I mean the levels of debt against the properties have remained extremely reasonable. So senior lenders are lending on average between, 50, maximum 60% of the value of the properties, which is a massive structural element on the market. And also what's very different this time is the level of interest. The interest environment is super, super low, which makes it very easy to service the debt, even on properties which are not perfectly performing. I agree that ESG and environmental aspects are becoming super important. Berlin Hub has been the first one to issue green fund briefs. That was something like 5-6 years ago already, and it's something indeed that gains in terms of importance. And it's funny because in Paris we have a phenomenon whereby the CBD is essentially made of properties which are old, in the sense that these are often Haussmann buildings, which can hardly be put at the standard of green buildings. Nevertheless, this is where everything happens, so it's interesting to see how things will develop there. But yeah, super interesting time, and maybe also very important. I would say the main challenge for the coming years is, if the rates start to go up, then can everyone be certain that they can refinance their assets in 5 to 7 years?
Okay, good. I'm going to come to you in a second, David, on this particular point. But there's a couple of questions that have come in on this, so I'll bring those in. Thanks very much, Chester Barnes, for your questions here. Does the panel think that the hybrid working model will adversely affect tenant and capital markets? And also, how long can the market accept increased tenant incentives without reducing headline rents, especially in more peripheral markets? So does anybody want to pick up those points?
Well, maybe I'll just sort of come in. I would sort of, like Didier, I've also been through a few market cycles. To me, I think the impact of COVID in terms of the office sector is going to be more marked than perhaps Didier suggests. I mean, that's our opinion. we've noticed that the occupiers. I was just looking at a newsreel the other day on Stellantis, which is the Chrysler Fiat, obviously one of the world's now largest, if not largest, car maker, and they call this new. They've launched something called the new era of agility. Now we have to see with these things whether it's a trend or whether it's something which is long term, but they're suggesting they're going to move to a 70-30, and that 70 is remote, 30 is in the office. Now, I mean, car makers are not the most, not known to be the most dynamic companies in terms of, they're not like the tech sector. They tend to be quite conservative. So I think that's quite telling. And I think to respond more to the question, Richard, from that you just spoken about, is that I think we see an impact of occupiers looking for much more flexibility in terms of the lease structure. In France, we have relatively short leases, but for larger space, obviously, 6, 9 or 9, 12-year leases. I'm not sure if that model is really going to function on a long-term basis. I think the drive will be for much more flexibility. It will be for offices which are perhaps offering a different function. I absolutely agree with Didier in terms of there are certain functions which have to bring people together. You need contact, particularly for people at the front end in terms of selling and going after new clients. You can't do that very effectively on Zoom or Teams. So I think the office space is going to have to reinvent itself, and it's going to become much more of a meeting place, much more amenity space, and you probably going to need a lot of areas where you have video conferences which you can bring people together. Maybe you've got a group of people in Paris in an auditorium or in space where you've got visual, and you've got a group of people around the world coming in. So I think the whole the impact of COVID is going to accelerate the digitalization of the workspace.
A question that's come in from Eric Lemaire. Thanks, Eric, for this. Which is, how hard are tenants pushing to renegotiate lease terms? And Eric is also keen to know about per asset class how this is working, and especially in the more peripheral markets. So I don't know if anybody's got a view on that, or anything that they want to pick up in terms of whether or not tenants are pushing in this direction.
I can pick up on this one if you like. I would say the obvious answer is obviously the retailers have been the one to obviously challenge, the payment of the rent, the service of the debt if they're, end users, etc. But, surprisingly, I would say that apart from, I would say, special situation, there has not been, as Didier mentioned, so much tenants, I would say large office tenants, or, in the, I would say, office, even in the hotel industry, that have been negotiating so much versus the owners. So obviously we were helped massively from the government. So at the end of the day, we have to see I would say end of this year or even beginning of next year, whether those big, support plans are going to end up. But I would say I was pretty surprised that, if you take the retail sector apart, by the pretty good respect of the leases condition within the main lines of real estate. So, and obviously retail has been critical as we faced 3 lockdowns so far, and discussing a lot with the retail owners, discussing those lockdown periods. How do you cut the rent? How do you give some incentive or not? As you had also multiple, I would say, message from different kind of government entities in relation to that. It's been a real mess, and I think the real challenge of the relationship within the retail space is going to be changing as to bear, I would say, with that kind of environment, because obviously we have the vaccine and a lot of positive things are coming around, but I don't think we're going to be in a, I would say, totally sunny situation in the next couple of months. So those kind of discussions are gonna come back again, obviously. But I would say, apart from opportunistic situation, apart from retail, I was really surprised to see that the behavior of the tenants was pretty good in respect to the lease.
Yeah, well, what I observe at the moment is that when leases come to the term, for example, the 6 or 9 year leases, that tenants begin to negotiate with the owners. And before, during the lockdown, there was the legal discussion whether the COVID situation is a force majeure, etc. So that put some uncertainty to the letting contracts. But I can confirm what Guillaume told us before, that it was quite stable, except for the retail sector or for other sectors like hotels, etc. But for the future, I think what I can observe at the moment is that letting contracts coming to the term are beginning to be renegotiated, and that opens up new discussions. And of course, that's in the end, it's an economic question. That's no longer the legal question, but it's a question of offer and demand.
Okay, good. Another question here from Chester, which is, how long can the market accept increased tenant incentives without reducing headline rents, especially in more peripheral markets? So let's use that also to pick up a little bit on rents. Guillaume, in terms of L'Etoile, what are you seeing there in terms of the rental situation in the sectors that you're active in France?
I mean, that's. I think that we are well positioned to answer this question, because we have acquired a few years ago 2 forward purchase office buildings, in one in the north of Paris, in the city of Saint-Denis, and the other one in the south of Paris, in the city. I mean, at the border between Paris and Montrouge. And Gentilly, and we are therefore looking for tenants on those 2 buildings, and I mean the competition to attract tenants has become even much more intensive than in the past, and I think that it has reached a level in terms of tenant incentive, which is kind of ridiculous, because we are all trying to keep our headline rent as high as possible, but the cost to pay for that is now to be able to provide tenants with incentive package, which represents something around 30 to 40% of the rent, which makes no sense. This makes definitely no sense, and for a tenant looking for I don't know, like 5,000 square meter around Paris, there will be 10, 15, 20 owners trying to attract them, and we are just giving, I would say, almost half of the rent free to the tenant. So we'll see what will happen in the coming months, but I wouldn't be surprised that there will be a correction to that situation, and that headline rent will eventually decrease a bit over the next months.
Okay, good. Thanks, Guillaume. Benjamin, I just wanted to pick up with you in terms of what you're seeing in looking at investor sentiment for France, short and longer term. What have you been seeing in terms of interest, capital looking? Have you seen an increase in that, or are you expecting to see an increase over the second half of 2021?
I would say the motto has been really a flight to quality lately, looking for very, very secured properties, which was fine for us because the lack of visibility made that we also wanted to fly to quality. What has changed lately is, I would say, well, first the emergence of a new asset class in terms of lending volumes, which is clearly residential. We have closed our first loan against residential properties in the first quarter this year, and we have opened, a new not division, but we have started to invest in that kind of loans because we think that the market is deep enough and that this represents a big opportunity for us. What we also see is that there seems to be a trend whereby office assets which are no longer performing are converted into new types of facilities like co-living schemes, for instance, whether for students or for young professionals. So yeah, it's very interesting, and things are changing peu à peu. The sole asset class which remains very difficult at the time is really, I think, hotels, because it's difficult to predict when the performance will be back. Even though it looks that, and it's very interesting, the say risk premium on these assets has not dramatically increased. So it looks like all the hotel investors, and I'm not a specialist by far, bet that there will be a recovery which is coming pretty soon. Very interesting to note.
Okay, good. Is anybody else got any views particularly on those sectors and what's coming through? Also the alternatives, if anybody's got a view on those.
Yeah, I mean, from our perspective, La Française, I don't want to be seen as an office basher, because actually we have 60% of our 25 billion plus of assets is in offices. So we've got every interest in making offices work, and we believe it will continue to be a core sector for investors. Having said that, we've been pushing hard in terms of our diversification, and following Benjamin's comments, I mean, we've been focused primarily on the beds. We're also doing some sheds, but we've got more history in the residential sector. We've actually found, this was pre-COVID, but we've been active, for example, in senior housing across France. We found that to be a very good sector. Equally, now we're moving more into PRS, private rented sector in residential in France, but also across Benelux and in Germany. And we see those sectors very, very interesting. I think the challenges that we face, though, as if you like, as humble asset managers, are that it needs even more local knowledge than, say, the office sector. So these are quite granular assets. We were discussing with Benjamin yesterday, ahead of the conference today, in terms of it's very basic, but the need to go and visit the assets across France before lending on them or before buying them. So I think many investors would like to increase their allocation to the residential sector, but I think they will probably find it's quite challenging to allocate the amount of capital they would like to allocate because of the granularity of the sector.
Yeah, just to add on this one, if you may, David, but you're really right on this. That I'm acting as an independent board member for one of the large developer here in France, and conversion into alternatives has been I would say more a marketing buzz rather than anything else, because one, if you say what David has said in relation to there's not a lot of money to allocate to that kind of strategy. That's the first thing. Second, in terms of geography, from a financial perspective, if you need the equation to work, basically you have to go, I would say, suburban, and you have to buy very cheap some obsolete assets. And at the end of the day, you got to add the capex work, and also the exit resi price got to match. So, and last but not least, obviously, the location is also, you can buy some kind of totally remote asset, because obviously for resi, you also need to be close to any kind of connection hubs. Could it be, public transportation, even, road network. And at the end, technical scheme too. So not all, I would say, the obsolete office or whatever use can be converted into alternative or resi. And also you have to bear the, I would say, urban disposition. So if you cook all of that, it's a harder recipe to go through. So it's and we've seen a lot of paper like we're going to do conversion, and a lot of people are allocate money to that. But the thing is, I think you need to be, as David mentioned, really sharp, and to really know the cities where you're going to invest in. And from a pure, I would say, high-level perspective, it's really hard to do that kind of strategies. And I won't suspect there will be a huge trend on that.
Yeah, I agree. I fully agree. And I find it strange that some of the investors would say we will start investing in resi because we are not receiving the expected returns from offices or other commercial sectors. But I don't see how you can get any kind of good return out of resi in France. I mean, by experience, all the resi I've always purchased has always been a low return and a lot of trouble. So then if you go to serviced resi, I mean, we got senior housing, student housing, where you have a lease, then it's different because you have the benefit of an experienced operator, and you come back to kind of hospitality situation. But the pure resi, not only the fact of fabricating the resi out of conversion, but even if you buy the finished product, it's a usual nightmare in France. And it will never match the return that you get from offices, for example.
Maybe. Just to explain why residential has been so popular these days, I think the explanation is in the fact that yields against commercial properties like office properties have gone down so much that it is not that far away from the yields of, say, not prime, but average or mid-quality residential, so that if you leverage yourself these days, considering the very low interest rates, you come to a situation where it's not that different. And indeed, the big difference is the fact that in terms of managing a residential property is really not the same as an office one. So there you have to be careful. I agree. And also probably, the question is always to know how long the low interest rate environment will last. Of course, when it disappears, then it puts residential properties at risk, indeed. Yeah.
Good. I've got a question that's come in from Virginia Perez Nieto. How does co-working regulation work alongside co-living? I'm sure a lot of people, if their lives have been anything like mine for the last 2 years, have indeed been doing co-working and co-living at the same time with our partners. But I don't know, is there a regulatory side from that? And if we don't answer this correctly, Virginia, just put a clarification in the chat and we'll try to come back to it. Is there a difficulty in terms of having co-working and co-living side by side in the same building, which I'm assuming is what Virginia is talking about? Is that an issue?
It's not something we've come across. I think our view is, and when we're investing in co-working space and co-living, we tend to do that on a rather separate basis because they kind of fall into separate buckets. I'm not saying that's the right necessarily the right approach, but that's kind of what we do. I think in terms of working and living, I think a lot of people have been challenged trying to work from home with cats and dogs, children, and other disturbances around them. So I actually think that the co-working probably from a practical perspective needs to be kind of separate, and people are going back to Didier's point about people wanting to go back to work. I think that's definitely a trend. People will want to have space that they can work in which is separate from their living. That's a different point, I think, from the proximity of where you live and where you work. I think that has not gone away, and maybe the world is changing, has changed or is changing still, in terms of either you want to be extremely close to where you work and you want to live in an urban in a city environment, or now with the benefit of working from home, if you can work from home for 2 days a week, then you have more flexibility. And I think what we are seeing is that around Greater Paris and beyond, house prices have been going up in areas, in green areas, because people are actually looking at the commute into Paris. If you're going to do that for 3 days a week as opposed to 5 days a week, it doesn't look so bad. So I think we haven't yet seen the full impact of what's happening, but I probably haven't answered directly the question.
Yeah, I can have a try because, perhaps the regulation means also legal stipulations. I understand it in that way that co-living is the destination of the real asset is for living, and if you put the co-working, then it's commercial or office. So you have to have different contracts as well, so for the tenants, and you have to observe the rules for the building. That must be a mixed use building for living and for office. So that's how I understood the question, and I hope I answered it.
But if you only take it technically, I mean, usually when you have multi-use buildings, it means that, for example, I mean, to be very basic, but emergency escapes cannot be the same for resi and for offices. That you have to have separate entrances. You have to. So I don't know if this can be improved in the future because of the what we are living now, and that maybe people want to work and live in the same building. But if you take it only technically now, from a regulation point of view, this is what you have to do. So you make your building not so efficient.
Yeah, but maybe that can also be solved, I think, with two complexes, or so you can have one complex for living purposes and the other one for. I think it depends on the specific real asset. Yeah.
Good. Virginia has indicated that yes, that has answered her question, so that's great. Thank you, and thank you, Virginia.
Thank you, Didier, as well. That was from the practical point of view.
Good. I've got a question from Eric Lemaire, and this is something that I wanted to explore as well, which is for office primarily in this particular case, which sub-markets in Paris do you see as losers and winners? And the same question between French cities. And I'd be interested to get people's view on whether or not there are changes in terms of, how do people see those sub-markets differently now? From what we've just been talking about, does that suggest more of a resurgence of regional cities if people are going to be moving and working and potentially living there? Anybody can pick that up.
I can pick up on this one. I mean, I think that the trend was already on before COVID, and COVID has just accelerated this trend. I think that the big winners in Paris, I mean in Région Île-de-France, are definitely the markets which are in Paris and which are the best connected. And for instance, I mean the two sub-markets which are very performing at the moment, I mean on top of CBD, which is CBD, are the ones which have, I think, the best connection in terms of public transportation, which is the center of Paris, like the Marais or République and Bastille, which are by far the best connected in terms of the number of subway stations, bus stations, and everything. You have basically a subway station every 200 or 300 meters, and rental values have increased dramatically over the last years in this market, and I'm pretty sure that this will continue and will get above 800 euro per square meter in the coming months or the coming years in this market, while we were around, I don't know, like 500 euro a few years ago. So this is the first one, and the second one, which was and which is still performing well, is the ZAC Paris Rive Gauche, with the line 14 of the subway, which is by far the best one, as this is the most effective one, the quickest one, and the one which goes to the largest public transportation hubs in Paris, like Châtelet, Gare de Lyon, and everything. So this highlights the fact that today tenants are looking for central locations and very good accesses. This is definitely key, and if you can provide them with that, I think that they are willing to pay even an extra rent to get this, because this is rare. There is not a lot of qualitative assets in those locations. So this was already on, and the trend will keep going, I'm sure.
And I would like to add something about also that we might see a revival of the schemes that were launched in in the late 90s with cities like Lyon, Nantes, Bordeaux, which are all very well connected with TGVs, and the train will become even more important in the future instead of flying. And with COVID, people found out that it's not bad to live outside of Paris. They can live in a better environment, and these cities which have known a big success for back office at some stage were losing a little bit over the last few years. But I think that there will be a revival of these schemes for people to live and going. Actually, if you think about it a bit more global, you could have people working from Nantes, for example, in a kind of co-working situation for time to time, but also having the headquarters in Paris and going back and forth. I think that might be something for the future, and so that could relaunch the investment interest for these cities in the future, not only for French investors but also for foreigners.
Yeah,
and which will therefore strengthen the fact that if companies are willing to get their back office in the region, they will need to have a very good connectivity to their HQ in Paris. And therefore they will necessarily need to have their HQ in the center of Paris or very close to the hubs of to the largest public transportation hubs in Paris. So yeah.
Yeah, it's exactly true. And just to add, and everyone knows about it because we keep on repeating this for like the last couple of years, but the Greater Paris Scheme is also changing the behavior of some tenants. So basically we see the backbone of public transportation within Paris kind of changing. So you have some small tertiary hubs or, commercial hubs, resi hubs that are kind of popping up like, giant mushrooms around the train station newly built. And it's also changing due to the connection, the way people can basically, work maybe a little bit more suburban and, being as close as to Paris thanks to the transportation. So you can see some places such as, Guillaume was mentioning Saint-Denis. Saint-Denis is a good example. Saint-Ouen is a good example. And more in the south, all the connection to the second major airport, which is Orly. You see, some cities like Rungis, Cheville-la-Rue, or, some vicinities where basically you didn't even know the name before, and it was not at all a tertiary location, that are getting some kind of traction and, kind of sweet attention from long-term buyers. So a lot of things are changing, and obviously mainly due to the great scheme we have around Paris and around France, more from a larger perspective.
I agree. I think Grand Paris, the infrastructure project, is going to be key in terms of looking at where the winners and losers you find. I mean, if I was talking to some children in a school and they asked me, how do you find the right locations to go to invest in around Paris, I would get out the map, the metro map, the RER and the Grand Paris infrastructure, and I think that's a good lead. I think the other factor, which I think Didier kind of alluded to, but is ESG. This is going to be a major factor, not just the environmental side of buildings, but also the social side and the quality of life, the amenities. I think these are going to be a key driver, and it will open up areas that perhaps they've not been so fashionable in the past. If you've got a fantastic building offering brilliant amenities, quality of life, and you've got obviously you need some certain level of connectivity, but we may find that those assets will perform very well.
And maybe a question for Didier and for you, David. You mentioned a lot the fact that the Grand Paris will have an impact. But is it really so? Because Grand Paris is mainly intended to ease the transfers from banlieue to banlieue. And what we've said is that in terms of transfer, what has increased and will increase in the future are commuting between the regions where people can afford to live and to work 1-2 days per week, and Paris, where usually the headquarters are. And that means that what's important is to be close to not necessarily a metro station, even a new metro station from the Grand Paris Express, but much more being close to a main TGV station. And I would see that the major change today is not really that in the regions there will be more office schemes, not really that in the Grand Paris also there will be much more office schemes attractive to tenants, but that really being close to major rail stations, which means in Paris and even in Paris CBD, is really the key. So that the overall trend that I would see these days is really, it's nothing fantastic, nothing new really, but the more central you are, clearly the more attractive you are, and vice versa.
I agree, Benjamin, but we cannot have everybody on the top of the train station. So that's the whole
nice
purpose of yeah, exactly. But the whole purpose is to have a great connectivity between stations, and that's the whole purpose of Grand Paris, is to connect all the hubs together, and that people who are in the suburb, they don't have to come back to the center every time they have to go to another suburb. And that's the purpose, to connect hubs, to connect suburbs together, and to connect all of those to the airport and stations. It will not be perfect, but it will improve a lot.
If you take Saint-Denis as an example, that the improvement in the infrastructure in Saint-Denis, I mean, if you can be in a good, comfortable train going from 10 minutes to Saint-Denis into Gare du Nord or to Gare de l'Est or to the major transport hubs in Paris, then clearly that's going to have a significant impact in terms of improving the attractiveness of the Saint-Denis market.
I wanted to just pick up a little bit in terms of the ESG impact side. I mean, impact has been a growing kind of theme in a lot of the sessions that we've been looking at. But particularly if we're looking at ESG, carbon neutrality, those kinds of things, does that mean that there's going to be a certain number of buildings, particularly in Paris, let's say, that become obsolete from that point of view? And is that then an opportunity for, either a change of use potentially, or for upgrading? How do people see that situation?
Yeah, that's a problem. I mean, if you take, as I think David was saying earlier, like or maybe Benjamin, the Haussmannian buildings. I mean, if we say that CBD in Paris will remain forever the first target of long-term investors, particularly if you have a long lease. But how come can we make an ESG, environmental friendly a Haussmannian building? I mean, unless you strip it out completely and make it new behind the facades, it doesn't exist. So there will be a question about this, whether these buildings would become obsolete. Now, if you go out of these CBD locations and you go into secondary locations, I think that the buildings that are not, that cannot become ESG and environmental friendly will be obsolete and will be either demolished or converted into something else. Now, one thing that ESG has become really a key element, as I was saying, that some committees are putting this as the first key parameter of decision. My question, but maybe because, as I was saying, I'm getting too old, are we sure we really understand all the ins and outs of what ESG is? That's personally, I don't. I mean, I read a lot of literature, but I'm not sure I get it all.
Just a point on that. I think it's only the legal framework that now gets a little bit more life because people have changed also the mentality, and I completely agree that Haussmannian buildings are difficult to make to adjust them to be ESG conform. But I think ESG is present in different aspects. It has to do with with the tenants, because the tenants, the multinational companies, for example, they are completely restructuring internally because of home working, so remote work and rotation models are becoming now more and more present in these big companies. So it's on the tenant side, but it's also what they want to present to their investors. And also what the real estate funds want to present to their investors. So I think it's also a marketing issue, and of course you can always adapt it from a legal side, and you can try to adapt it. But I think it's a great market demand for ESG conform investments, and that's why this pushed forward. So we have the legal framework, but it's now really coming to life because there's a huge demand for that.
But it is very subjective. That's the problem. Is that we see that every country. I'll give you an example because you say there is also the tenant aspect in ESG. Obviously, that's. But for example, in France, a company doing nuclear business is ESG compatible, because in France we lack nuclear energy, but for Germans it's not ESG compatible. So we will have a kind of a crazy situation where we will have to think about for whom it is ESG compatible. So it's completely subjective, and that's where we're going to get into trouble.
But I think that's one of the real challenges, is that I'm sure Sabine is faced with this on a regular basis. But one of the problems is there's no harmonization yet of across countries. There is no two countries today which have identical standards, and so I think until we have those standards, it's quite confusing, I think.
Yeah, it's very interesting, because if you look at the sole environmental aspect of ESG. As of today, each country has its own set of labels, and I can tell you it's a funny story, but sometimes we finance properties in France which have super good environmental labels, and which under our criteria as German lender do not qualify for green buildings, which means that we cannot refinance them through green fund briefs. And that's just because the criteria are different. And if you add the environmental issues plus the social issues plus the government issues, there will never be standards on these. So yeah, indeed, how can you work in such a framework? It's tricky.
Yeah, but I think for the sustainable part now we have, and Guillaume is also well placed to jump on this one. As you know, when we were selling an asset in Paris with a beautiful green label, obviously we were faced with I would say green engineers to validate the true capacities of eco-friendly features of the building. So I would say for tech and sustainable aspects, now it's part of the due diligence to assess the building from a pure, I would say, energy technical perspective. So I would say on this side, obviously, even if the standards or the labels are bespoke per country or per region or whatever, at the end you have a model that can ensure you that the building is efficient or not. But absolutely, from the social and G thing is it's still the discussion area, I would say, to whoever is buying. So, for example, if we have someone that is involved into some polluting activities, obviously it could be a no-go. For others, as they're, you can have any kind of compensation. If you can pollute and then, plant trees wherever you want, then you get some compensation. So it is okay. So I think we'll see in the future, especially for long-term investors, some pure due diligence aspects on those S and G components as we are facing on the eco-friendly side of things. Guillaume, I don't know how you feel towards this one, but
No, I mean you are right, and I know to which building you are referring, and I mean just to add on that, that's true that the ESG impact has become a go or a no-go for international investors, and we saw it when we were selling our building recently. We had to explain exactly what label we were targeting. and how we could obtain it, and what were the features of the building that we wanted to improve in terms of ESG. So that was not only getting the label, that was explaining the label, explaining exactly where we started and where we are going and how we are obtaining this label. So there was a real willingness from our buyer, all the potential buyers, to understand exactly what was our impact as investor on and through the refurbishment of the asset in terms of ESG.
Great.
Yeah, so that means that our world might become better, but it will not become simpler.
Well put it. Well put it.
We're almost out of time, but just a quick question that's come in from Massy Ladrozida there. Thanks Massy for this. What are the attractions of the market outside of Paris for international investors, given disruptions from COVID, Gilets jaunes, and questions on political, legislative, and tax issues coming up? And the last one here as well from Simon Foxley. Thanks very much, Simon. Are the costs of environmental compliance being reflected in valuations? So if anybody's got an answer to either of those.
I think that on the international aspect of the Parisian market or the French market, even though we faced many challenges over the last years, we had the Gilets jaunes, as you said, we have now the COVID, and there are plenty of other issues that we faced. As asset manager or investment manager, which work to bring international investors into the French market, we saw that the appetite from investors from all over the world is still here and is still increasing. We bought for Koreans, we bought from investors in the Middle East, we bought a lot on behalf of American investors. Whatever we face, the appetite is still very strong, actually, because the Parisian market is one of the largest and most liquid and resilient in the world. This is still very attractive, I guess, for international investors, and this has been the case over the last years.
I think there's also been a benefit for Paris in terms of Brexit, in a way, because there's been investors have a clearer focus on euro against GBP. And I think the demand for Eurozone is very strong. And as Guillaume says, Paris is the largest office market in Europe. Therefore, I think you can have the debate about being in the centre or outside, but actually Paris is a fantastic market for international investors. It's such a big market, a deep market, and there are different segments that you can invest in.
Yeah.
Great, we've done an entire hour without mentioning Brexit, which was
Sorry about that. Someone had to do it. It had to be a Brit.
Absolutely.
That was great. Just quickly, because we've promised it to everybody, which is where do we see the opportunities? So a quick 30 seconds each on where do we see the opportunities. You can either decide that that's now or sort of more longer term. But where do you think there are opportunities? Sabine, let's start with you. Just where are you seeing the interesting opportunities at the moment?
I think the interesting opportunities are really the adjusted office market, so for creating new office spaces, but adapted to the ESG issues. Logistics, oh gosh, will stay resilient, I think. I think the demand is still too high and the offer too low. I bet that data centers and life science, for example, are the special assets that could be very interesting for the future. And just to respond also, I think there was a last part on tax and legal in the last question. I think the main or the important things is always to have a good asset, and for tax and legal there's always a possibility to find, and I think we have come through the largest difficulties of changes in French tax and law the last years, and there will be always changes, but they are manageable.
Okay, great. Guillaume, in terms of L'Etoile looking particularly at France?
I think, today, the assets that we are targeting mostly are large office buildings, today obsolete, but very well located, which are not really sought after by institutional investors because they're obsolete, but for which we identify a real repositioning potential in terms of services, ESG, the way you rethink and you will use the office space in the coming years. So this is definitely the buildings that we are trying to purchase today.
Okay, great, David.
I'm not going to talk about the office sector, but in terms of where we're really focusing, last mile logistics, I think the whole disruption that we're seeing from COVID is not finished yet. I think logistics as a sector, even though, we all know how expensive it is today, but there are still possibilities to access that, particularly at the development phase. I think that's going to be a real winner. And I think there's a few years to go before we see really the full, that becomes a mature sector. And then residential, despite what we've said about the challenges and having to be very local, I think the residential sector is going to continue to attract increasing amounts of capital from institutional investors. And again, I think being at the development, the front end of that in the development phase is going to offer some very good opportunities.
Great. Guillaume.
Yeah, so obviously, offices and resi, and I would add into that mixed use, because I think that, the mixed use and, all those kind of operated use could really help to shape, I would say, the post-COVID office or the post-COVID, resi life we are aiming at.
Super. Benjamin.
I think there's a lot to invest in these days. I would be tempted to invest in co-working schemes. I know they haven't been very popular lately, and there have been some crashes. Nevertheless, the need for corporates to have flexibility is there, or probably has increased. So co-working definitely. Co-living as well. Co-living in Paris, I think, is super interesting because there's a big clientele for that who's ready to pay 100 more euros per month against all the advantages and the services that you get. And also, I think very emerging asset classes like these famous shadow kitchens, where the meals are prepared before being delivered to you by Uber Eats. Also is super interesting. And also something emerging in Paris, very interesting, are these shadow supermarkets. I mean, areas where the goods are stored and where you do your shopping online and then within 10 minutes get your goods at home. So you need spaces for that. Yeah. I think, it's super interesting.
Good call.
Okay, interesting, Benjamin. Great. And lastly, Didier, was Guillaume correct? You can tell us.
Yeah, no, absolutely. I mean, our core knowledge has always been offices, and we are great believers of the future of the offices with ESG, with co-working. We will have to adapt, and we will keep investing in offices all over the place. But also, we are investment managers, and we have requests from clients, and we know that today Koreans, they are dreaming about buying these Amazon platforms where the last mile or not last mile. So we do logistic, we will do also senior living, we will do probably some co-living. So we will follow the trend because that's our business also to make sure that we match the client's expectations. But at the end of the day, our core business remains offices.
Super. Mark, thanks very much. Any views on where real estate financing is going, given current inflation threats? It may be the subject of a future roundtable indeed. Mark, you're absolutely right. It will be the subject of a future roundtable. But if anybody just wants to, in 30 seconds, pick that up for Mark, just because I've spotted that just coming in. So current inflation threats, is that going to have any impact in terms of the financing side?
Benjamin, it's for you.
Yeah, that's what we
Wow.
Jump in.
Well, yes. It's a super interesting topic. We've seen lately rates increasing at levels which no one expected, really. So it's nothing new. But if the monetary policy changes and if rates need to be increased by central banks in order to compensate for some inflation risks, then indeed things will change. Never forget that today is a moment which has never occurred before, where it's so easy to pay your interest because they are so low. But will that last forever? Question mark.
Yeah.
Good. And Mark, you're absolutely right. That is a question for an entirely different discussion. We introduced it there briefly, but we will be looking at debt again very, very shortly. Thanks very much for all of your questions. Really interesting. Thanks to all of the speakers for a really good session this morning.
Bye.